Hi, it's Conor Svensson here, founder and CEO of Web3 Labs. This is a conversation I had with Maxim Galash, CEO of Coinchange. Maxim has innovation in his DNA, having founded and advised numerous startups over the years. In our conversation, we discussed how he first got pulled into blockchain and cryptocurrency and how Coinchange came to be. We also go into detail about the regulatory climate with respect to cryptocurrency and the many regulators businesses such as his own have to engage with to bring innovative products to market. The regulatory perspective in our conversation was of particular interest here, and I'm sure you'll have some great takeaways from it. Max, it's awesome to have you here on the podcast today.
Thanks for having me, Connor.
So you've been a technology innovator throughout your career, having founded and advised at numerous startups. At what point did blockchain or crypto first pop up on your radar?
That was kind of pretty late in my journey, I would say. I'm still pretty early in my journey, but it was late considering that I'm 35 right now. So I've seen the crypto probably came to my knowledge in 2016. So it's been about 5 years. I'm in the space. 2016, I was just kind of reading the news, buying some Bitcoin. And I actually was participating in the ICO boom as well. I mean, I was buying some little tokens, trying to gamble a little bit. It was just not about the profit, more about the participation, right? And as a firm believer of the blockchain technology and decentralization and access to opportunities, right, I thought it's going to be a good exercise for me, right? So yeah, since 2016, kind of been in the space, and I'm more entrenched right now, definitely than before.
And were there specific, so you mentioned Bitcoin, you started off there, but were there other technologies that really captured your attention? And as you started to learn more about what was happening, you read white papers and so on and so forth. There must have been triggers as well, which made you feel, yeah, this is, wow, the things that people are trying to build here are incredible. I want to get involved.
Now, I'm going back to my background a little bit. I'm a electrical and computer engineer by trade, right? So I went to University of Toronto and graduated in 2011. So I do understand the blockchain mechanics and kind of the procedures behind it, right, and the framework itself. So it definitely was a fascinating to read, right? And it was a problem that been tried to solve for a while until the Bitcoin white paper came out. So people were thinking about it as well, and not only on the forums on the internet, but it was discussed in the academia as well. So that was kind of fascinating, definitely to see the solution, right? And but that's not what caught my attention. I mean, that was definitely interesting. That was definitely technologically challenging, but I didn't really see that because there were internet money before, right? But not to the distributed extent when you can actually verify and validate, right, the ownership and the ledger. So I believe in the big marketing power behind any product, right, for the adoption and for network cycles and for there was always economy of scale as well at anything like mining as well as an example. So I didn't really think it's going to be that big of a phenomena, right? And tsunami, right, kind of taking over traditional finance, some of our back office operations, right? And I mean, the blockchain is going to be everywhere, I think, like the internet right now. But I mean, it was pretty basic use cases. I had some family and I'm from Belarus, so I had some family in Belarus. I needed to send some money, and I used to be using Wise.com. I don't know if you're familiar with TransferWise from Estonia. So those guys are great. I mean, I love their product. But then I just decided to give a try to a new way to send the money and, to give a present to some of my friends and family. So let's say for the birthday, I sent a little bit of Bitcoin to a friend of mine. So, I mean, it was kind of like this teasing game and getting to understand the use cases behind it as an early adopter, I would say. Right. So the technology was a part of that, but I didn't really emphasize the technology angle. I thought it's there, it's good, it's solid, and I wasn't in a position to challenge it in any way, even being a computer scientist, or electrical computer engineer. I wasn't really in a position to kind of try to challenge the concepts that were discussed mathematically on the white paper, right? So more on the human down to earth level, sending it, paying it, receiving it, and I didn't like the experience in 2016.
And so you were kind of dabbling in it, and you saw there was applicability in things like cross-border payments as well. You were working on other business ventures at that point. So at what point did you make the jump and get involved in Coinchange? Because it started off, of course, not being about the Coinchange sort of DeFi play.
Yeah.
From what I could see, it was provided a number of different services for people to get involved in digital assets, including like an OTC desk, security, token, funding advisory, and market data.
Yeah. If you going back a little bit into the background of the journey that took me to the Coinchange. I mean, when I still was at the university, I used to work at the SAP Consulting. Then afterwards, I founded a small professional service agency, pretty much developing apps for clients, outsourced. The main R&D office was in Belarus as well. And the client and designers and client-facing stuff was in Toronto. So that's still running. That business is still functional and doing okay. Definitely all my focus and attention is towards the Coinchange. But before that, since 2011 to 2015, we had a small venture fund called BGS. That's when I actually got an entrepreneur bug, right? So when we were looking through a lot of decks, I was 23, I think, when we raised the fund. And I was one of the GPs there, managing the money, going through the decks, making decisions. I thought I knew everything, I thought I was the king of the world, right? But you always, looking back, you always understand how you underestimate, right? The circumstances and overestimate your efforts and yourself. So I'm a little bit more down to earth right now, obviously, making sure like when you roll out the product and a lot of different mechanics behind the business and especially the funding. So the BGS took me to world of startups, right? And I loved it. We deployed the capital, didn't raise the new fund. I went kind of back to the ITM, that's my service agency, and was looking to open up a venture lab. So with the venture lab, what we did, we took equity in the businesses, we helped build the products for it. So we kind of iterated our own ideas as well, tried to build a seed to sale platform back in 2016. That's when I was playing with crypto. We were building cannabis seed to sale platform. As you know, Canada, we're applying back then to introduce legislation federally to allow growing and selling. So that was kind of a big window of opportunity at that time as well. And a lot of people made huge money in the business itself, not only growing, but also selling, but also providing software. It's like a full new industry, right, that came to market. So we were one of the tech guys who were thinking how to solve the seed to sale platform, buying the seeds, going through the cycle, and getting the license from Ministry of Health. That was a good product. We built it, took it to market, kind of overestimated the market in terms of the adoption and number of licenses to be issued. So I handed it over to my partner, James, and I went back to the ITM and buying and selling crypto. I thought there's a better way to do that because I was using TransferWise at the same time. And I love those guys with the transparency, the fees, the speed, the UX that they had. So I thought, why can't we just do it in the brokerage business for crypto? Why is it so complicated? Why you're in Telegram? Why you don't know really the market rate? Why can't you check it? Why there's no unified market rate? Why there's fees that are embedded? Why there's spreads, right? Why there's all that's baked into the price? And at the end of the day, I'm getting, not a very favorable service. So I thought, why can't we just turn it around and build something transparently online where people can come and buy very simple, a calculator, right? So that was kind of the beginnings of Coinchange. And we incorporated 2017 and started self-funding the thing out, put some budget together through our cash flow. And personally started investing in the business, doing the market research, doing analysis. But it took us a while to actually understand what we want. In 2018, we started building the brokerage. Brokerage was very simple as well, business. So it's a smart order router that we built. So connected to multiple exchanges, aggregating the order book, putting the order through simultaneously at a few places where the price is better. So price volume ratio is better. So that was done. It took us about 9 months to get it done. By the end of 2018, we took it to market and marketed as you were saying an OTC desk, right? So saying like, okay, you can buy OTC desk again for consumers, not like you can buy 25,000 minimum, right, and have to register through the paperwork, and you can onboard online and buy from $5 plus, right? So that was the premise. We probably. In mid 2018 as well, we've seen that the adoption is already becoming saturated. So the market itself, the brokerage market, was Kraken, Bittrex, BitMax, Coinbase, obviously. Binance is the biggest elephant in the room. I mean, it was becoming a more and more saturated market, right? So we're looking for a solution. Where do we have to pivot? Because in this market, I believe in this market specifically, you have to be very dynamic. You have to be very fluid and flexible to understand, because there's so many different circumstances that influence you. Not only the consumers and market conditions, but also regulation, compliance, competitors, market overall, right? So we did understand that even in 2018 and looked for a pivot. So we founded a company that's called QSAT. That's where the data play came in, right? So those guys were providing data for hedge funds and crypto funds, and kind of the graph, aggregated it from the blockchain, running their own nodes, analyzing it, cleaning it, preparing it, and fitting it to the hedge funds, or just funds who are playing in the CeFi and DeFi world, not DeFi, CeFi at that time. But we started contacting those guys out and just talking to them, getting some professional services from them. I mean, what can we do? This is the platform we have. What do you guys have? What's your ideas? Can we merge? Can we do something? Is there a way to actually get more than brokerage? Because we did understand brokerage is a race to the bottom, right? There's always fees are always going down. Customers are always unhappy. Cost per acquisition always goes up, right? Because there's more and more players coming in, and it's becoming commoditized. So we started kind of brainstorming, and one of the chief product officers of that business, and then Vadimi's name, he's in our team right now. He came up with the idea saying, listen, why don't we, they were already looking at the DeFi data and how the mechanics works and how the blockchain works, and overall understanding what data they can find there that's going to be useful, right, for those funds that are clients of theirs. And they had only 3 funds back then. It was a small business. Those guys had about 10 people. So, and we were at the same level. We were about 10 people back then as well. So we spoke to them, and we thought DeFi is kind of something interesting. Maybe we can do a brokerage on top of DeFi. Maybe there's liquidity. But then in, I would say, early 2019, we thought, okay, listen, it's all this abstract layer of DeFi is actually built for liquidity provisioning. It's actually built for people to find earning opportunities within that, right? So, you provide liquidity. Without the liquidity, DeFi won't exist, right? So only liquidity providers enable and empower those applications to function, right? Because the application is just a mathematical formula governing a certain behavior on a certain blockchain a certain way, right? And kind of the rules are open. If you want to play it, you read the rules on the white paper, and you can start playing it yourself or as a business, right? So we thought, okay, why don't we try to enable that ecosystem, participate in that ecosystem, and build something that will aggregate the retail liquidity and fit it to the DeFi ecosystem to find earning opportunities, so to yield, right? Doing good for the customers and doing good for the ecosystem, kind of advancing it with the liquidity. So that's how we started the journey in terms of the pivot towards the 2019. That was the pivot. And it took us 2 years to build it out. We were building it out for 2 years. We just launched in August. August this year, we launched our yield account, high yield account. So that's kind of the premise of the story.
And so, in effect, you were looking at DeFi quite early on, though, given that in 2019, we hadn't reached 2020 where you had the DeFi summer and things just went bananas.
Yeah, it was 45 million TVL.
And did you, off the back of what happened last summer, as in the 2021, where DeFi really started to pick up, and there was all of the interest in yield farming and all these new things that came to light. Did that affect your roadmap or the sort of strategy that you had, or do you feel you were kind of already going in the right direction to be able to embrace these sorts of parts of the ecosystem?
Conor, great question. We're always revisiting, we're always reflecting. Okay, we're always paranoid that we're doing something wrong, and we're always reflecting on our actions, because that's the market where you have to be very dynamic and very sensitive, right? You have to have your fingers on the tab all the time. So not only in 2020, we do think about it right now as well, right? But fundamentally, when in 2020, when we raised the first external round in 2020, late 2020, we got the first external money in, and before obviously pitching to those investors who came into the round, we were thinking about the strategy, right? And you kind of all strategy is more long term, mission strategy is more long term, obviously. the plan as something more short term. So the strategy always was, I mean, the premise of the decision was, okay, if the market is going to get big, right, and we believe that the DeFi can be a big market, meaning like close to $1 trillion, right, eventually of the overall volume, it's going to get regulated. Okay, the governments will come and will look into that in more details and understand. I mean, what does the mechanics mean? What is it? Decentralized finance per se. So the very first kind of day or months when we started to look into that wealth management in DeFi, call it that way, or yield farming, we thought we need to find a way how to make it compliant, right? So we decided to be centralized. It was kind of also a debate internally. Do we go to Web3, become a protocol and a token, or we become a centralized entity and race through the equity rounds and eventually have our own token, right? It's completely two different roads, right?
So initially with the centralized kind of track, it was partly to be more regulation friendly. Would that be fair to say in the early stages?
Exactly. So the decision was based on the premise, okay, if that's going to get regulated, we better get ready right now. So have a budget for it, have a DNA for that, and have a bit of a processes for that, right? So we kind of had to choose the slower scalability route and a harder adoption route and more friction route, right? Rather than just becoming a Web3 application, like let's say Rivalry Capital per se. Swissborg is also a centralized application, right? But those guys have their own token, have a community incentive, have a DAO in place. And it's different for us because their way was ICO 2017, right? And it kind of also relays a certain obligation to your investors, shareholders, and token holders, right? So for us, the decision was, okay, let's go that route, the equity route, because I knew that route, right? I was a venture guy. So I thought, okay, let's move that route because we know the investors, we know the process, we know how to raise money there, we know how to provide value there. So that was kind of the decision. And it actually fundamental decision. I mean, if you're looking at it right now, still affects us right now because we have Jumio, we have Chainalysis, we have KYC, different tools for the KYC as well. We have compliance officers, right? So it does create that kind of a slow burning OPEX. I mean, you have to carry around, and it does really create friction for the customer. So sometimes you have to you always have to sacrifice one thing for the other in your life, right? Any decision, personal, business, doesn't matter. So that was a business decision that we made, and we sacrificed the fast growth, taking and scaling the technology that we have on the decentralized, fully transparent manner, right, into the centralized, more regulated way. Why? Right? First of all, I mean, we understood the route. Secondly, we thought for non-crypto users to come into the space and to widen the adoption, we have to get the fiat somewhere. Right. And then back then, I mean, right now there are some solutions, right? They're expensive, but they exist that have the bridges between the DeFi and CeFi, and they're still expensive. But what we thought, if we want to tap into the non-crypto market, and our product by design is done for the non-crypto user. It's a very simple interface. It's a bank-like transactions. It's positioned also for the non-crypto users. So, and then the app is coming, by the way, in a week. So in Conor, download it. So the decision was, if we want to tap into that market who's not yet in crypto, not crypto native, not crypto friendly, but non-crypto people, you have to get the fiat into the system. How do you get it? You get it through the banking relationships. You get it through the payment processing relationships like ACH, right? So you have to have those policies, KYC policy, anti-money laundering policy, security policy, and all that jazz to be able to be a fiat deposit taking institution. Right. So that was our as well idea. If we want to really drive the adoption and we want to really get people who's not in crypto yet to come and join the party through our value offering, right? Because there's different ones for everybody. We should have a fiat on ramps that are simple, easy, that are simple and efficient and cheap. So that was the decision.
And so, with respect to the regulatory angle, you mentioned, of course, the reason why you've gone down this certain path was in order to embrace that aspect as the landscape matures, because certainly in the US market, for instance, everyone is waiting eagerly for some proper crypto regulation to be put in place. With your company, you have entities, from what I could tell, in Canada and the US. And so how's regulation? I know that you've been proactive at one level with respect to
Yes.
taking on things like KYC, ensuring that you have control over the platform to just be able to facilitate the sort of constraints that regulators put on you. But where do you think the regulation's going with respect to this space right now? And are there specific things you'd really like to see, or are there other things that you think will come into a play? I'd love to hear your thoughts there.
Got it. Listen, in terms of the regulation, first of all, I don't think regulators are bad, right? From my perspective, they might be slow, they might be not very knowledgeable, they might be not efficient, but they're not trying to do anything bad, right? For the consumers, right? Because the premise of their decisions is, first of all, votes. Secondly, it's consumers, right? Consumers who's not going to get in trouble with the scammers, right? People who are bad actors, right? So I don't understand the premise of making a decision and drafting up the regulation, but there's a lot of uncertainty. First of all, the machine is slow and they have their own priorities, right? And we're a small kind of buck on the table, right? So I think it's, we're pretty interested in what's happening in the US right now. It's a very complicated market. There's a lot of regulatory oversight. So you can see, you have a Consumer Protection Bureau, you have a banking committee, you have FDIC, you have CFTC, you have SEC, right? So there's multiple regulators who's looking to be a boss for the industry, but there's none right now. So there's also a fight, kind of a competition internally, who's going to do the oversight. So SEC is kind of stepping in big way, but CFTC is also not on the sidelines, and Consumer Protection Bureau is also, can write not subpoenas, but they can write letters of request to investigate how you position your business and what kind of marketing you do. Right? So there's a lot of angles, and that's why US is the most complicated market. Not because it's hard to penetrate and acquire American users, because they're very fluid and they're also risk taking and they also like to experiment. There's a lot of adoption and early adopters in the space, just because of the regulation and the banks. So I think US is moving in the right direction, more or less. If you look at the stablecoin business, let's say, and if you have your own token and you provide yield on your token, right, and the people earn on your token, and so definitely there's profits to be made, right? And if they're paid out specifically in token, not in kind, it can be considered as your token would be considered a security, right, in the States, because people buy it for profit, with anticipation to earn some profit sharing, right? So, but the complexity comes not with the understanding what's a security, what's not security. Habitas has been around for a while, and definitely, it's kind of a benchmark, but not all. I don't think it's a true benchmark, to be honest, but it's something to use, at least, right? To make yourself to hedge your risks. But the complexity comes because there's multiple regulators, right? And there's no badge you can put on the business. Let's say in our case, right? So you go talk to one lawyers, they say, okay, guys, you're a fund. You go talk to the other lawyers, they say, oh, okay, you're a investment advisor. You go talk to the third, or you're a lending business, So you're like, okay, guys, it's fine. I understand, right? So the complexity is taking the decision how you mitigate the legal risk while still operate in that set framework, right? There is no framework. You can try to put us in something, but you can always challenge that decision, right? So nobody's willing to write a legal opinion. Let's say that your business is a certain way. Brokerage is a separate business. Brokerage is a pretty straightforward business that's been around for a while, and they will also work all differently. Some people operate on their own float. Some people just resell the float. Some people, there's also consumer protection, because the spreads are coming in at the price, and you kind of not really disclosing the spreads to your customers. So you front run the customer per se, right? And it's not a good business, right? You not only the good business practices, but it's bad for the customers. So I think brokerage is a less complicated and more understood business to follow in terms of financial compliance at the back end. But the yield business that's right now booming, right, an interest business on the accounts in terms of lending, it's definitely more complex issue, and you cannot put a badge on it yet. I think what's going to happen, it's probably something similar to what's happening in Europe right now. They're going to have a virtual asset service providers regulation in 2024 that's going to be harmonized across the European Union, right? Because in the States, you should not forget there's state level governments as well, right? So they also have their say, right? And how to regulate on their own soil a certain business, right? I mean, either you're going to get an MTL license, so money transmission license, and operate in a certain state and take a deposit, or you might be a state charter bank like SPDI, Special Purpose Depository Institution, what is Kraken acquired, right, in Wyoming. So those state level regulators, they also have a say. They also have their own statutes, right, to follow. So it's becoming even more complicated. On the federal level, you have 5-7 guys. On the state level, you have 5-7 guys. So how do you actually work, right? So in Europe, I like the approach there. We just set up an entity in Poland as well, and working with lawyers to acquire the license to operate in Europe. Probably going to take us 4-6 months. It's a financial institution license, but they're saying, guys, in 2024, man, there's going to be a harmonized regulation all across Europe, right? They're going to clear rules, and it's already in discussions right now, right? So they're moving there. I like the single point of entry approach, right? So you won't have to run around for different countries, different regulators, different government bodies. So US, I think, is moving in that direction right now because the MTL. I mean, the famous MTL, like this is what crypto started, and people try to acquire it, like Kraken has that, and more bigger exchanges do. It's one application to one state that governs 32 states, right? So it's called NMLS system. So they kind of try to unify and organize and centralize that process, right? But the problem for them, they don't. I mean, not even they, the lawyers, the auditors, the business owners don't understand how they fit in the existing framework. So I think we're moving in the right direction, more or less. But Singapore, look at the Singapore. I mean, if you look at the global scale, right, I would say the best benchmarks right now are Singapore, Dubai. I don't really know many other. Malta used to be, but right now there's too bad reputation, right, about the AML compliance there. So I think Dubai and Singapore is really at the forefront of regulatory innovation and oversight. Canada, I think it's very conservative, very protective, and very monopolized market in terms of banking. There's only 5 banks in Canada, 5 big banks, right? So it's kind of quasi-government. So, and for us, like, we spent a lot of money to understand the US and how we operate there and to write the letters to the regulators. And in Canada, we're still debating if that's the market for us to stay and be here, because the barrier of entry is high. So right now you have to actually they do understand it because they created 2 licenses. It's called Marketplace and broker-dealer. But it's also not, not too clear that you are an independent broker. I mean, if you operate a yield farm, an automated yield farming operation, right? So they didn't really want to learn too much. So they kind of said, okay, this is the 2-1, and you guys decide. I mean, you still have to register. Whatever your business is, I mean, if you touch it, that's the way to go. So we're still evaluating. And the small market as well, right? Canada is about 40 million people right now, and the adoption is not very high. And the banking system is complicated to get connections to, right? So like in the US, you have Silvergate, you have Signature Bank, they have their own blockchain networks connected to the liquidity providers. They do allow to do ACH, FBO accounts, so holding the fiat and trust of the client. Like, there's a lot of innovation happening in the banking system in some of the pockets of the US. In Canada, very little, right? There's no open banking per se, right? So one bank doesn't know what the other one is doing. Like, I know UK is really also at the forefront of banking innovation. There's a lot of companies coming out of UK in the fintech traditional world, right? So it does create challenges here, not so much. So Canada, we're still evaluating, and I think it's conservative, it's protective, and it's quasi-monopolized market. So it's really hard for the fintech innovators to get. Either you have to go under the umbrella of the bank or a bigger institution and become one eventually, right, with the processes and everything, or you look south, you look to the States, right, or you kind of have to, again, navigate the uncertainty to a certain degree. So I think Canada is a small market. Europe is the big market. That's where we're heading the next. US is our primary market. Europe is number 2.
Yes, it's fascinating to actually hear this, because you've got this perspective on all the different regulators in respect to how crypto friendly they are. In terms of there's no doubt you have to engage with them to actually bring your products to market. And so does that mean that right now Coinchange is only available in a subset of those jurisdictions, and so you're in effect going through these conversations with these regulators individually to launch in those different markets? Or is it more that you're able to actually launch, but you need to then speak to them more as a goodwill sort of gesture?
So it's a business decision to take, first of all. Secondly, I mean, you're still in violation if you launch, pretty much, right? For them, right? I mean, we can talk about it and look at different angles, but if you, I mean, it's kind of, again, it's not a really, there's no law that, if there's no law that governs you, you're not in violation, right? The problem is, I mean, if you go to market without legal opinion, let's say, and become operating in a certain jurisdiction that's high enforceability, so they enforce their, the regulator is active and enforces a lot of action within the industry. So let's say in Africa, I would say it's not the case. I mean, right, you can go to one of the African countries, I don't know Nigeria, but let's say, I don't know, Chad, right, and operate there, right? And unlikely you as a Canadian business are going to get subpoenas, or highly proactive regulators will hunt you down, right? But the US is the case, right? Russia is to the less extent. Let's say Europe, depending on the country as well you operate and the market share that you have. So for our decision, what we said, I mean, regulation can't hold the innovation back. It should not, right? So there's always, what was your intention, not the action, right? So if you're intending to do a good business, you have some good processes, right? And you have, let's say, treasury management, compliance, a bit of a financial regulation. I mean, at the back office, making sure the balances are right, the assets are higher than liabilities, and so forth. Then I think you can go to market. You can start opening the discussion with the regulators. What we did, we wrote letters. So we hired a legal firm out of Washington to analyze our business, to understand the processes, the real mechanics of capital flow, who owns the case, what is MPC at Fireblocks, how does Silvergate work with you guys? Look at the contracts, put together a letter, and email it to all the regulators at all the states, right? Asking the permission. It's called letter of authorization, asking for the permission to operate. All letting them know we're coming to operate. We're there. But there's other approaches as well, right? I mean, you can, because you cannot be waiting for the regulator to allow you to do business. I mean, if you already spend the money and you are moving, I mean, we're moving every day, right? There's action happening. Clients onboarding, product is developing, people are working, right? So you have to take those decisions and analyzing the risk. And to be in this business, I mean, you have to have some kind of a risk appetite as well. You cannot be fully risk-free, conservative, and go to crypto markets, right? Or DeFi markets as a business owner, as a CEO. So I think there's always a balance. I mean, you cannot be a Wild West crypto, anarchist and operate in a more centralized manner, right? That's a DeFi. I mean, there's still a good innovation in the full decentralized manner happening. Like that's where the innovation is happening. I mean, we're just connecting right now for the most part, right, to different protocols and different earning opportunities, right? And we curating them. We're building our own proxy smart contracts to connect them. We have algorithms to analyze them, and we have execution to feed the liquidity in and out and do the swaps or whatever we need to generate that yield, right? But they are actually creating those protocols. They are actually enabling that activity. So I think that's a big part of the real innovation infrastructure, right? So regulation, I don't think, should keep the innovation back too much. And you are, as a founder, have to analyze and decide by yourself. I mean, what's the risk appetite you're willing to take? What kind of, I mean, some of the advice that we got, I mean, if you guys are not ready, just go to the rest of the world and then take US after, right? I mean, because as I mentioned, there's a lot of jurisdictions that are low enforceable, right? A lot of countries in Europe, Eastern Europe specifically, Russia, Asia, right? I mean, China used to be, right? Not used to be, but not the last couple of years. I mean, right now they're pretty tough. So they're vertical decisions that they make, and it's pretty fast for them to make a decision, right? The party can vote pretty fast. So yeah, I mean, that's a business decision. It's all about the risk. It's all about the evaluating. But it's good to talk to the lawyers. Anyways, it's good to talk to the lawyers, pay them a little bit of dollars, get their opinion. Not maybe informal, but something in writing, something by email. Not really legal advice, but some analysis, right? Legal analysis. It's good to have to base even your own decision, because it's a big risk in the industry and in any business right now, especially in this space.
Absolutely, and there's certainly the landscape is changing so much from a regulatory perspective too, and things like the taxation side with things coming up,
Yeah,
and just finding the quality advice as well is such a moving target on
exactly,
top of everything
exactly.
else, right? It's difficult. So from what you're telling me though as well, with a lot of what you've built out, and given the fact that a number of banks are starting to eye up the blockchain ecosystem, last week for instance, Commonwealth Bank in Australia, one of the large banks there, they actually announced that they're going to be providing a native crypto integration in their app. And so there's thinking further down where this thought experiment's going to go with it, it seems natural that these sorts of institutions are going to start to want having bridges to
Right.
DeFi as well, and they of course come with a huge base of users. And so
Yep.
is that another angle that you guys are looking at?
So let's start from the banking and the competition, because the angle you were asking is yield as a service, right? So we discussed that. I mean, API business, B2B sales. But traditionally, I mean, we're not against the banks, okay? Especially when we look, let's say, at banks at Wall Street, right? JP Morgan, I don't know, bigger institutions like Blackstone. Those guys have the best class minds on their desk, right? Working every day. And those guys have been in business for 100 years, right? So what does it mean they adopt? Because it's not the last innovation, or not the first innovation that happened in the financial markets or overall in our life, right? Those guys been in business when we weren't. Okay, so meaning that they can sustain the market conditions, the change in market conditions. They can hire, they can equi-hire, they can merge, right? They have the capital and the users. So obviously, when we started 2 years back in DeFi, it was a really good window of opportunity to start building our infrastructure, because we knew that there is no big players that providing liquidity or earning or looking into the space, right? So it was pretty straightforward for us to make a decision. Okay, is there a window of opportunity? Can we compete? Right? Do we have enough talent? Okay. So right now, obviously, this gap is shrinking, right? In DeFi and in the CeFi lending business, so like Celsius, Nexo, all those guys are playing still the old banking game, right? Getting the money from retail, loading to the institutional desks, right? Taking the spread. So there is innovation for sure, because it's a new ecosystem that's not governed. That's why the banks weren't there playing, and they could have entry, right? And they started 4 years back. They have big balance sheets and a lot of clients. So there are two different segments, right? In crypto, CeFi and DeFi, obviously, and then in lending and yield generation or interest on your accounts as well. So I would say the CeFi game is getting saturated, right? And the banks will come there first, because they know the lending business really well. They have lending desks, they have compliance, they have customers already who's borrowing from them billions of dollars on a daily basis, right? And those customers are looking at their balance sheets. Should we buy Bitcoin? Should we diversify? Right? Have it as an asset? Can we borrow against it through the banking relationships that we have, right? So it's all coming there through the need of the client, right, of the traditional bank. So I'm sure those guys are right now coming into the game and enabling purchases, sale, custody, and eventually lending and borrowing of the Bitcoin or some assets, right? Cardano, Solana may be a great asset, right? Who knows? So there's definitely going to be five good assets, maybe 10 good assets, right, in the space that everybody will own, I think. But right now, Bitcoin, let's say as an example, right, the most fundamental and the most strong use case, right, in blockchain world. So I think the CeFi banks, the traditional banks, will come and start playing in the CeFi lending business and CeFi yield generating business and creating competition for Celsius, Nexo, BlockFi. And the market is going to shrink. So it's going to get more competitive. The margins are going to get smaller. It's better for the customer. At the end of the day, cheaper borrow, better lend, so forth. So more efficient market. The DeFi, I think, is still a nascent market. So $200 billion that we have right now is still pretty small comparable to the 3 trillion in crypto right now. It keeps growing so fast. And traditional markets, right? So, but what we hear, I mean, we just started hiring extensively. I mean, we're just closing our round right now with some money in the bank, and we're talking to some Wall Street guys as well to hunt them down from the traditional traders and Seidel and Blackstone. And those guys do believe in DeFi. So before joining any business, I mean, obviously, especially smart people, like quants, like global financial engineers, people who worked in that traditional work for a long time. They look into what kind of business would they join in. Is it a good path for their career? What are they risking? Okay, what we hear right now, me as a CEO, when I'm interviewing those guys and talking to them, pursuing them, saying, okay, that's you guys should jump ship, right? You should come, you should play. They do believe in DeFi. They say, listen, I mean, there are a lot of people are interested, and a lot of smart people are interested to come into the space, meaning that through their due diligence and understanding of the markets and the trajectory of the market, they believe that DeFi is partially the future of the finance, right? So it's not going to eat up the financial world, the traditional world, but it's going to get its own big pie, right? And be sustainable. So I think that definitely those funds, not banks, but funds like money managers, people who right now play in equity markets, forex markets, derivatives markets, are starting to look in DeFi more closely, right? Starting to hire people, starting to not even hire, but starting to analyze and do their research, right? Because afterwards, after the research, they have to have summaries. Summaries goes to the managers go to the boards goes to the shareholders. So there's an approval process for obviously big funds who manage billions and trillions of dollars, right? Billions of dollars. So I think that is going to take some time. Our space that we operate in, and we operate more like we're not an asset manager per se, but we do the same thing. We collect from retail, use economy of scale, use our infrastructure, and deploy the liquidity to different protocols and pools, right, as an LP. Then we use that LP token to stake. Then we realize it. Then we can use a loyalty pool to stake it. Then we can lend it. So there's different mechanics and different pools that we utilize to maximize our earn. So this is not a lending business. This is a smart liquidity provision and smart yield farming business, right? So more closely related to the asset management business in the traditional sense. So our competition won't come from the banks. It will probably come from the traditional asset managers or the CeFi players like Celsius, who's trying to get into the DeFi right now, and they understand they're late to the game. So as we've been, let's say, we're late to the interest game. We're late to the interest on deposits game. We just started it 2 months ago, right? It's been around for 4 years. But I think we were early in the DeFi ecosystem and being an anchor technology infrastructure right now that we built, that we can utilize to have a competitive advantage in the interest game long run, right? When that market is becoming more saturated. So yeah, banks will play, but more in the CeFi lending business rather than the DeFi yield farming business.
And on that, your company at the moment, they support, according to the website anyway, it's one inch pancake swap, Uniswap, Sushi Swap, Aave, and Compound. At what point does a project or protocol get enough traction for you to warrant actually wanting to bring it on board, so to speak? Because the landscape is changing. Obviously, those specific protocols that you have listed there, they're the leading ones. Yep. But you must be evaluating new ones all the time. And so what kind of criteria are you using there to say, yeah, right, let's turn this one on, guys. It's I think this is something we want for our customers.
Conor, it's a great question. Listen, I'm not really very deep entrenched with the risk analysis that we perform. I do know that we have about 3 people right now in the business who's doing it full time. So research and risk analysis. The criteria that I know of, right? There's about 8. And to be honest, I mean, there's existing frameworks already in DeFi established to follow. We're going to publish ours as well, some of it. So right now, in the next week or 2, I mean, it's we're going to get more and more transparency in what we do and how we do things, right? I mean, that's kind of imperative to build the trust, right? There's nothing to hide. And we're fine sharing the knowledge, with anybody else. I mean, because the space, I don't think the space is about the competition, to be honest, right? I mean, we have to kind of align with the other players and more funding the other players get, more spotlight we have, right? More trust the other players get, more trust we have subsequently, right? So I think it's not about the competition, killing the banks, killing the competition. There's definitely a competition in innovation and in technology happening, right? But I don't think the market should be competing too much with each other right now. Because there's still, if you go on the street right now in London and ask anybody about Coinchange or even Nexo or even Celsius, right? They will say, okay, I mean, why Celsius? Why not Fahrenheit, right? Why Coinchange? Why not the MoneyGram? So they won't know anything about our business. The market is huge. We're just at the beginning of the infraction of the market penetration. So the risk analysis that we do right now, right, to make sure that at least that I know of, right, there's frameworks that we use, but looking at the size of the pool, right? So we don't participate in the pool that are less than $150 million of liquidity. Secondly, who is providing that liquidity, right? How many LPs are there, and what are those LPs, right, who participate? I mean, you can track it through the blockchain. Then third, we look at the white paper, obviously, of the protocol itself. Fourth, we look at the team of the protocol. I mean, this kind of the obvious things. Fifth, we look at if there's an audit and who performed the audit. And we know a lot of people who work in the security and audit space, so we can reach out and ask their opinion as well. So this is the 5 basic steps, but there's definitely more than that. So I mean, we will publish some of it, or most of it, very soon on the site as well. But there's a lot of risk. I mean, Conor, it's a really good question. Why? Because there's no reward without the risk. There's always a balance between the two, right? You can get 200% right now APY on some shady pool, shady coin, and lose everything in 2 days, right? Or is due to technology risk, due to pool draining, whatever happens, right? Due to just a shady coin and bad intention. So there's definitely always a balance of two things. And our research team and risk team works closely with the quant team.
Yeah, there's certainly something that you talk to on your website as well. Of course, what are the risks here? So apart from DeFi and just that kind of bringing DeFi type opportunities to CeFi, what are the other things about blockchain that really interest you the most in terms of its potential?
I think it's the space evolving so fast. Look at the NFT market, right? Everybody puts it in as an example. I mean, it's 2 years back, nobody thought about it. A year back, nobody thought about it, right? Right now, it's kind of on the top line, right? Of the news everywhere. So, I mean, I was talking to my wife yesterday as well about the paintings, and being arts. I have 2 kids, right? I said, listen, we have to start maybe some music classes, painting classes. I'm not this type of a guy, right? I'm to the full one. I mean, I'm not really like an artsy guy who's fascinated by the art or can stare at the picture at the Green High Museum, for an hour. So being an engineer, probably more practical than emotional, right? So, but I like the concept of non-fungible tokens. I definitely think there's a future for that. There's definitely a hype right now, right? Something news always hypes people up, right? Especially the news. I mean, I try to read as little as possible because otherwise you get too much excited, right, about your business, about the future. So I think they had non-fungible tokens and the playing aspect of that. We're looking at this esports teams right now. I mean, just as an angle, we're looking to sponsor one of the esports teams right now and analyzing various teams. Serge, by the way, is doing that, right? And our team who arranged the podcast. So I think the future of esport, e-gaming, and the NFT will go hand in hand. There would be there's going to be a lot of resemblance of the artifacts, of the sharing, of the digital economy per se, right? Digital ownership. Not like to the metaverse side. I don't really understand metaverse too well, right? I mean, I know people who are very deep entrenched in that. I think it's all getting segregated, right? Like DeFi is getting segregated on itself, right? It's becoming big, so people are starting to work in the separate pockets, right, of DeFi right now. So metaverse is one of the future economies that we see might be a cornerstone of a future behavior of people, right? So same for the digital economy. But NFTs, I think they have some legs. Especially with the e-gaming going to market right now, big time. And there is a big economy in the e-gaming. I mean, I'm not really a gamer myself, and my son loves Roblox, by the way. So, and he's like 9, and he's been playing it for 2 years. He's coding his own games there right now. For me, it's like, wow. These kids, when they're going to be 18, for sure they're going to be in the metaverse. For sure they're going to be playing they'll know NFTs. He knows Bitcoin right now. He listens to me talk. He's like, Bitcoin, yield farming, DeFi. I'm like, wow, okay. You see, you're just 39 and the bright future you had, right? So for sure, those things are going to embed in the life of a younger generation and ours.
Yeah, definitely. It's incredibly exciting. And there's just the amount of money now in esports as well is absolutely phenomenal. So just as we wrap up, Max, if people want to, reach out and, follow you and connect with you, what are the best mediums that you recommend there? Of course, they can go to the Coinchange website. It's coinchange.io for information about the product there. But if they want to, follow you or connect with you, what would you recommend?
Yeah, I'm pretty active on Twitter. Just by the way, I joined in 2011, I noticed, or 2012, but I never been active, right? So as we started the business, obviously part of the trust in marketing is being out there talking to people, providing your opinion, right? So I started being pretty active for the last year on Twitter. So you can find me there, Maxim Galash, and I'll pop up. And I'm pretty good with LinkedIn as well. Just search me there. or email ceo@coinchange.io, and I'll get the email. If you're looking for, if you're fascinated by DeFi, we're hiring right now, right? So for all the positions, so there's quite a few on the website. But if you're just smart, professionally ethical, hardworking, and willing to learn, right, about the space, you don't really need to know much about the space right now. I mean, we will onboard you and get you started. So email me with any questions or opportunities.
Awesome.
Thanks, Conor.
Yeah, Max, it's been an absolute pleasure to speak to you, and I look forward to seeing Coinchange grow and grow. It's certainly got a bright future given the space.
Thanks, man. Appreciate it. It was really a pleasure as well.
Cool.